Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the European Union meeting in Austria to be held on September the 19th. That's tomorrow for those of you watching this webinar live. And I'll talk about the potential trading opportunities that will come about as a result of this meeting and the opportunities presented by Brexit. My name is Sasha and I'm a financial analyst from the research department at 4Trade. I'm really pleased at the interest shown in our webinars. If you have any questions, I will do my best to answer them, or please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, let's talk about market opportunities. If you don't know what they are, allow me to explain. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis, according to market conditions and based on historical evidence. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It is important to understand it's solely your decision whether you trade on market opportunities or not. Here is an example of a market opportunity. Here you can see fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the screen, that's 1.3080, this shows the right moment in our estimation to come in and open a trading position if you decide to trade on this market opportunity. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. You can see the trend direction here, which is up. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit. And further down you have calculations if you close the position using take profit. You can expect these kinds of profits. If the price is going against you, then you can potentially have a loss of this amount. At support 1, 2 and 3, that's in red. The pivot point then is the starting price based on which resistance and support levels are calculated. These support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So, a brief history of Brexit. In 2016, on June 23rd, the UK held a rather bitter and divisive referendum, which was expected to produce a narrow majority in favour of remaining in the European Union. The leaderships of all three main political parties supported EU membership. However, although 52% of the country voted to leave the European Union, while just over 48% voted to remain. Since then, the Conservative government, propped up by Northern Ireland's Democratic Unionists, has been negotiating with the EU, while the Conservative Party itself is divided on the issue. Those that want a clean break from the EU with no trade agreement are referred to as hard Brexiteers, and those that want to continue some kind of customs arrangement are called supporters of a softer Brexit. There is a third group that is gathering some political momentum, who are pushing for another referendum, that want to remain in the European Union. This division across towns, the country and political parties, and the diplomatic battle with the European Union has caused numerous trading opportunities which has seen huge changes in the value of the British pound. In any event, the likely outcome of a no-deal Brexit that supporters of a hard Brexit see as no bad thing. So, the initial reaction of the currency market to Brexit. As many economists predicted, the markets would not be kind to the British pound in the event of a vote for Brexit. On the date of the referendum, when the results were announced, on the 23rd of June 2016, the GBP-USD currency pair collapsed by more than 11%, as you can see here, around 11.9%. Similar losses were recorded against multiple currencies by sterling on that day. Since then, the pound has been highly volatile, being far more affected by the Brexit issue than any other, including interest rate movements. Although when the two factors combine, pound currency pairs can move sharply. I'll give you a brief account of political developments of Brexit which have affected the markets, causing great movements in the pound. And then I'll go over a few other Brexit-related events that has affected sterling. So on this timeline, we can see what I showed you a moment ago, with the pound crashing over 11% after Brexit on the left-hand side of the screen, and then stagnating somewhat. The pound rose when elections were announced in 2017 over optimism that there would be a more unified government position on Brexit. However, elections were no help since Theresa May's party won but lost their majority in Parliament. So the pound didn't recover so much as stabilise. As you can see, in September 2017, the first step towards Brexit, the repeal bill was passed, and you can see the pound grew in value against the dollar. In December 2017, the UK moved to the second phase of negotiations after the EU agreed on the Brexit divorce bill. The pound grew to its highest levels since the referendum result. In March 2018, the UK and EU make further progress, causing the pound to climb further. But on April the 18th, Prime Minister May suffers an important defeat in the House of Lords, which sent sterling downward, until recently, when optimism over a deal has gained momentum. Much of the headlines have been negative regarding Brexit, so sterling has seen some quite sharp falls. For example, Bank of England Governor Carney has been asked for his view on Brexit following interest rate decisions, during parliamentary scrutiny or in the media. In an interview on the BBC on August the 3rd, 2018, Carney stated that there was an uncomfortably high chance that Britain would leave the EU without a deal. He said that the Bank of England ran an economic simulation in the event of a no-deal Brexit, which suggested that the UK will fall into recession while unemployment would rise. As you can see here, the pound traded lower against the dollar upon this interview by 0.2% before recovering. So, the EU meeting in Salzburg and more recent developments. This latest round of talks was proposed by UK Prime Minister Theresa May and confirmed on July the 28th as part of the UK's strategy of attempting to bypass the European Union's chief negotiator, Michel Barnier, and appeal over his head to senior EU countries' leaders, such as Germany's Angela Merkel and France's Emmanuel Macron, directly. EU officials have rejected the idea that Michel Barnier has been given new instructions from above. However, although there is a long way to go, it appears that this British strategy has partly succeeded, as increased optimism on Brexit has seen the GBP supported following unusually positive statements from Barnier, who said on Monday the 10th of August that an agreement between the UK and EU on the terms of departure was realistic within the next 6 to 8 weeks. On this graph, you can see how optimism following Barnier's statement. Traders pile in, buying sterling, causing it to jump 0.76%. Later in the session, the EU stated that reports of the EU's willingness to provide concessions have been exaggerated. This caused the pound to drop back somewhat, as you can see on the graph. So there are generally speaking, two primary obstacles, and one actually main obstacle, and that is the Northern Ireland border. The issue here is how to avoid customs checks and police at the border between Northern Ireland and the Irish Republic once the UK has left the bloc. Northern Ireland is a particularly sensitive issue for the UK, and as I said before, the Conservative government has a coalition agreement with the Northern Irish Unionists, who favour a harder Brexit. This complicates matters, since if Theresa May makes concessions, the Unionists could withdraw their support for the government, potentially causing it to collapse. There is also another obstacle includes agreement on issues such as trade, fisheries, and aviation. So what's the outlook in the event of an agreement? Well, any such agreement, of course, would be welcomed by the markets and would support the pound. If the meeting this week is successful, the UK and the EU would then meet in a special Brexit summit in November, expected to be announced at Salzburg, to formally conclude the withdrawal negotiations. The formal announcement of a date, by the way, will be seen as a sign of confidence that there will be a deal, and may cause the pound to rise further. If the summit takes place, it will likely be around November the 13th to November the 15th, and a full account of the deal, or the lack of one, will be provided. But this is far from the end of the story, since once a deal is reached, it has to be approved by the UK Parliament and the EU Parliament. With no overall majority, Conservative Party rebels have and will likely use their power to reject or to try to amend an agreement they see as giving too much away. Prime Minister May has already lost her Foreign Secretary, Boris Johnson, who himself has political ambitions to lead the country, and her former Brexit Secretary, David Davis, over the EU issue. They both resigned over her Brexit policy. An EU-UK deal, then, is only half the problem solved. Thus, the markets will be closely watching how Parliament reacts. If Prime Minister May does not succeed in pushing the agreement through, she could face a leadership election, which would cause yet more volatility and potential downward pressure on sterling. But if the politicians are unable to agree among themselves, either another referendum or a general election seems likely, and again sterling may be under pressure in the event of this scenario, or these scenarios. In any case, the most important date is March the 29th, 2019. This is the date by which negotiations must be concluded. If no agreement is created by this date, the UK will leave the EU in what is called a no-deal Brexit. While hard Brexiteers don't mind this scenario, most politicians and the vast majority of economists believe this would be bad for the UK economy. Sterling would be expected to weaken, and UK stocks would also react negatively. Of course, we at 4Trade will be following any developments that Of course, we at 4Trade will be following any developments that affect the markets very closely. So please do get in touch with the Senior Account Manager if you have any questions or want to take advantage of the trading opportunities that this event will present. Until then, goodbye, and please join us again at 4Trade soon.